If you are claiming VAT but miss one small step, the FTA can reject you or fine you. Hey everyone, welcome to the channel where I make the UAE taxes simple.
Back in February 2020, the FTA released an important clarification called VAT 3017 about how and when you can claim the input tax. Now I know it has been a few years, but many businesses are still getting this wrong, even in 2025. And if you are not careful, you could be losing money or facing penalties without even realizing it.
So let me walk you through a real story.
Meet Aisha. She runs a small design studio in Dubai. In April, she bought supplies from a vendor, got a valid VAT tax invoice, and claimed it in her return. 6 months later, after the FTA audit, she got an email from the FTA saying, "Your VAT claim is invalid." Confused, so was she. Now you may ask, what was the reason for the reductions of the input VAT?
So let's break it down.
To claim the input VAT in the UAE, you need to meet 3 conditions. Number 1, the expenses must be for the business use. Number 2, you must have a proper tax invoice. Number 3, you must have paid the supplier or at least intended to pay within the 6 months. That last part is where most people slip.
The FTA clarified this in VAT P017.
They said just receiving the invoice isn't enough. You can only record the input tax after you have formed the intentions to pay. What does that mean? Simple. Once your accountant or manager approve the payment internally, that's when the intention is formed.
Most people assume, I got the invoice, I'll claim it. But if your finance team hasn't approved the payment yet, you have claimed the VAT too early. But in Aisha case, she claimed it in April, but her internal approval happened in May. That's why her claim was rejected.
So what can you do if this happens? You can claim the VAT in the next return as long as it's within the 2 tax periods. But if you delay more than that, you will need to file a voluntary disclosures.
Now here is something most people don't realize.
If you don't actually pay your supplier within the 6 months, you must reverse the VAT you claimed. Then after the payment is made, you can reclaim it in your VAT return. So yes, intentions matter, but real payment still count.
Here what I suggest you do.
Step 1. Review your recent input tax claim. Step 2. Check when the intentions to pay was formed. Step 3. Make sure your finance process is aligned.
If this video helped you, hit like, subscribe and drop a comment. Should I make more videos on your doubt? Let me know.